This strategy has now delivered 4 out of 5 trades. Clean setups, easier to spot, and it gives frequent opportunities. Most traders don't blow their account because they are lazy. They rely solely on indicators, some random signals they found on Telegram, or they are trading with strategies they don't even understand. In the last episode, we covered the building blocks of price action: market structure, candlesticks, trends, chart patterns, support and resistance, and all the fundamentals. But knowing concepts alone does not make you a profitable trader. Understanding how to put it together is the most important thing. Once you truly understand why something works and not just how, you can start building strategies around that concept that fits your trading style. And this is what today's video is all about. Instead of feeding you with a random strategy, we are going to build it together. I am going to give you a price action trading formula and show you how to turn it into your own trading strategy. We are building it from scratch all together. And what we will be looking for is when to enter, when to exit, and in which market condition does this strategy works most. And most importantly, how much you are going to risk on it. And we are not just building a raw trading strategy. We are going to test it right here. Real chart, no hidden losses. Just the pure results from this strategy. If it works, you will see, because I am not here to look smart in front of you. I am here so that we can learn and trade together. So if you are tired of guessing, tired of copying strategies that need 5 to 10 confirmations before entry, tired of copying strategies that don't even make sense, and now you want something that you can really understand, let's build it together right now. Let me show you the framework we will be using today. The MABI formula, a simple strategy for trading price action. It stands for market structure, area of interest, build up, entry trigger, and then exit. And if this sounds familiar, good. These are the exact concepts we have been learning in the previous episodes. So today we are coming to put them together to build a simple price action trading strategy. The first thing we do is to identify the market structure. And this tells us the overall direction of the market. Is it accumulating, bullish, or a bearish market? And we do this on a higher time frame. Imagine you have a structure like this. Price drops, pulls up again, drops, and then push up again. So let's assume this is a daily or the 4-hour chart. You mark out your major swings, your breakout structures, and your market structure shifts. We have a high up there, a low, a high, a low, and then another high. And then we have a breakout structure here, and a change of character up there. This gives you the bigger picture of the market. No guessing, no trading blindly. Next, we find the area of interest. This is where the market is likely to react. And this includes the support and resistance areas, trend lines, channels, and key chart patterns. So we now mark out our area of interest on the chart. So here, that is our resistance. Here is a support. And here too is a support. These are your area of interest. And the price is more likely to react at these areas. Patience is key in trading price action. You don't chase price in the middle of nowhere. You wait for price to come to your area of interest. When price reaches our area of interest, we then look for a build-up. This is a tight consolidation or a narrow ranging market inside your area of interest. Inside that zone, that is your battlefield. That is your area of interest. Now you don't rush the entry. You zoom in. If your higher time frame is 4 hours, drop to the 15 minutes or the 5 minutes chart and watch how price behave in this zone. Sometimes it forms a tight ranging market, and sometimes it forms a small channel. That build-up is your clue. That is where the trading is being prepared. Now your entry. When price is forming a build-up in your area of interest, that is where you look for entries. Now this is where the real work starts. Once price is building inside your zone, that is your moment to focus on entries. The type of build-up tells you everything, whether to enter, wait, or to walk away. If the build-up is ranging, mark the high and the low of the range. As long as price stays inside, do nothing, but just wait. When price finally breaks the range, you still don't rush in. The clean entry is on the retest of the range. Your stop loss goes just beyond the range. And now you can target a sharp, controlled risk to reward. And if the build-up is mini trend line, you wait for the breakout of the trend line and then you enter at the retest. And here too, your stop loss goes above the last high. That is how you tighten your risk. Instead of using the massive higher time frame structure, placing your stop loss above the higher time frame high, you trade off the small structures that the market is building for you. You mark your ranging low and your ranging high, wait for a breakout, and then enter at the retest. Instead of placing your stop loss above the resistance, you place it above the ranging high. And this gives you a precise risk to reward ratio. This tells you exactly when to enter, not emotionally, but technically. And then finally, your exit. You don't just buy at support and hoping for price to reach your resistance before you close. Every trade must have a clean stop loss in a well-defined target. We already covered how to calculate this in the previous episodes. So make sure you understand this properly. It is very important. This is what turns a random trading into a well-structured trading. Now let's put this into action. On the most traded pair in the world, the EURUSD. First, we start from the daily chart, and that is where we get the big picture, the real story of what price is doing. This is the daily chart and the market looks extremely bearish. But before we jump to conclusion, let's mark the most recent structures. Let's just start from here. We have a break of structure here. a break of structure here, and then a break of structure here. But from here, price pushes up and breaks above this high. So we got our change of character here. And then a break of structure to the upside. The change of character right there hints at a possible reversal. But we don't trade hints, we trade confirmations. Price was falling extremely, but now it is making a push upward. This last lower low is the real turning point. So let's zoom out and ask the important question: can this zone be trusted? So we mark that zone and extend the line to the left. And watch how the market has reacted to this area in the past. And if we zoom out, we can see that here the price reacted to this zone as a support, here as a resistance, here again as a resistance, here as a support. And if we move further, we can see that here too price reacted as a support, here as a support, and then here as a support. That is more than 5 reactions, so I think we can trust this area. Here, 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 here again, and then here. So I think we can trust the area. Now we have a hint. And the price might continue its bullish move. At least maybe until this zone. So we'll be expecting price to move to this zone before a possible bearish move. That step 1 of the MABI formula is done. Market structure identified and marked. Now we move to the next step, our area of interest. This is where the market usually makes its decision, where reversal starts or continuation gets confirmed. So now we drop to the 4-hour chart to refine those zones with more precision. The daily break of structure and change of character areas are key technical reactions we care about. So we mark those zones clearly and treat them as our area of interest. These are the zones where the market is most likely to react, not random levels, but places where real decisions are made before. So now we mark this area and then mark this area too. Even though it is not a break of structure, but price has just reacted 3 times in this zone. So we then mark the change of character zone, mark this break of structure, and now this turning point becomes our support, and the structure up here becomes our resistance. And if we watch closely, we have a low here, another low here, another low here, and then another low here. So let's try and see if we can join these lows with a trend line. And that is it, the trend line perfectly touches 4 of the lows. And right here was a fake breakout. Step 2 done. Area of interest are marked out clear. Now comes the build-up. We don't do anything until price actually reaches one of these zones. When it does, we drop to the 15-minute chart and simply watch how price behaves inside the area. This is where the story starts to unfold. And that is when we start looking for entries. So here price is already inside our area of interest. So this is where the real work begins. Let's drop to the lower time frame and simply observe how price reacts. We are only looking for one thing, a build-up. And that build-up will show up as either a ranging market or a small trend line forming inside the zone. Price is sitting in the zone, but nothing confirms yet. And here patience is key. No build-up yet, so we are just waiting and watching. Now we got it. We have spotted a mini channel, and that is our build-up. Next, we focus on entry, but we are not rushing it. We wait for price to break the channel, and the ideal entry comes at the retest. Patience here is everything. Let the market set up everything perfect for you. What we have got right here is a fake breakout. Price breakout and immediately push it back into the zone. A real breakout is what comes with a strong displacement, a clear decision move that shows the market is really in control. And this is exactly what I'm talking about, a clear, strong push. This is a real breakout. Now let's wait for price to retest the zone for a clean entry. Patience pays off here. So we enter right here. Placing our stop loss below the fake breakout will give us a very huge stop loss, which is not smart. Instead, we use this recent low, keeping our risk controlled and aim for simple 1 to 3 risk to reward. It is about controlled trading, not just hoping price reaches the next high. So now let's play price forward and see what happens. Ooh, here we nearly got it, but let's keep waiting and see what will happen. And that is it. TP hits. Now let's go back to the 4-hour chart and review price. And price has just broken above the previous area of interest. But now where it is sitting, there is another high here. Let's mark it out. There is another high here and price has just tapped into the zone. But we don't trust zones blindly. So let's extend the line and watch previous market reactions at this zone. It acted as a resistance here, as a resistance again, and as a support here. As a support here again, and I think we can trust it. So now we zoom back into the 15-minute time frame to see how price reacts at this zone. And what we will be looking at is another build-up around the area. And there it is. We got a ranging build-up just around the area. So we mark the zone and wait for price to break either above it or below it to give us our confirmation. And right here, price breaks below the range low So we mark the low and wait for price to retest it as our entry. So that is it. We enter here. There is no any structure high inside the zone to give us a smaller stop loss. So we place our stop loss above the high. And then target for another 1:3 risk to reward. So let's play price forward and see what will happen again. And oh, we nearly got it, but let's still wait. And that is it. Another win, 2 trades, 2 wins. I noticed something in the trade run. This area, price has reacted many times at this area. At first, it hit it as support, came back and break it, and hit it as a resistance, and got all the way near our take profit, and price reverses all the way back into the zone. So we mark that zone and keep it for future use. Price might react to that zone in future. Now let's zoom out again and look for another opportunities. Let me add some colors to our zones to make them stand out. Price is printing out higher highs and higher lows on the chart. We have a higher low here, a higher high here, a higher low, a higher high, a higher low, and a higher high. Now notice this. The latest higher high formed inside our area of interest, and it is already showing a sign of reversal. And this tells us price is likely to pull down into this zone to form a next lower high before continuation. This is how we read the market instead of guessing. So now let's zoom back into the 15 minutes time frame and look for another build-ups. We got a mini trend line build-up here. So we mark the lows with a trend line and wait for the market to break it, retest it as our entry. We enter at the retest. Stop loss above the last high and aim for another 1:3 risk to reward. That is another magnificent win. This is our third setup and so far so good. 3 trades, 3 wins. The move right here does not have a clear structures, so we can't take it as a build-up. So let's move on and see what the market will bring. We finally got another mini trend line build-up. So we connect the lows with a trend line again, wait for a breakout, and then enter at the retest. So we enter here, place our stop loss above the high, and as usual, target another 1:3 risk to reward. And this time we got a loss. That is our fourth setup. So far 3 wins, 1 lost. Let's get one more setup to make it 5. Price finally comes back into the area we marked earlier. Now the question is, can we trust it with our last trade? Let's watch how price behaves around the area. If it breaks above it with a strong momentum, we wait for the retest and look to go long. And if it shows rejection, we wait for confirmation and look to go short. This bearish engulfing candle could be our confirmation, but I don't trust signals blindly. I want to see a retest or a proper build-up first before entering. We take the entry at the retest. Now let's look at previous structures and use the closest one as our stop loss. And then target, as usual, 1:3 risk to reward. No guess game. We don't predict, we react. So let's see what price do. That is another win. This strategy has now delivered 4 out of 5 trades. Clean setups, easier to spot, and it gives frequent opportunities. Not the kind of setups that keep you waiting all day. So that was it. You have seen the strategy. You have seen it built. You have seen it tested. And you know exactly what the strategy is based on and what actually you are looking for. So now I am going to challenge you. Go and run this setup on your own chart, but make sure you try that on your demo account first. 10 trades on any pair, on any combination of time frames that fits your trading structure, and make sure you track your results. This is how a real learning is done, not just watching videos, but doing the work. If you actually do this, you are ahead of 90% of beginners. Because most of us are here watching videos, but we don't practice what we are learning. The comment section is for you. Tell me what you think I have did right or wrong. Or after testing the strategy, tell me what you think we should adjust on this. Don't forget to subscribe. We are building a real community. Learning, trading, and profiting together. This is Genius FX. Learn, trade, and profit.